Will Fed Chair Jay Powell go as far as to actually rattle the markets tomorrow? I mean, the markets are not complying with what he and his colleagues have been telling the markets. Does he do it tomorrow or wait?
Well, I think he's going to hold off. The Federal Reserve has to walk a increasingly narrow path, I think, between staying the course, showing the market it does have that discipline, but also acknowledging, as Ms. Hayes pointed out a moment ago, the fact that inflation is beginning to come down and the economy is showing some signs of softening. We've had very aggressive tightening late last year. Federal Reserve wants to see how that plays out as well. So no hints of moving to the sidelines, but on the other hand, perhaps a little softer wrapping to that decision to stay the course.
Softer wrapping, I like that. Gary, how long will the Fed have to stay at its terminal rate before the economy is in trouble?
Well, we think the Federal Reserve will be raising rates another 2 times. Beyond that, they will get the lay of the land. We think that the economy will support further interest rate hikes, quarter-point hikes, more moderate than what we saw last year. And then as they move toward that 5% mark, a little bit more caution there in assessing the trajectory of inflation and the extent to which the economy is responding to past rate increases.
In terms of some of the market reaction and action that we've seen today, we're seeing markets rise, but at the same time, earnings still pretty tepid, particularly Caterpillar, something of a bellwether, showing some of the risks that are still out there. So with that in mind, how sustainable are the gains that we're seeing? Do you anticipate we might see a correction over the next couple of days as we hear from Jay Powell?
If not immediately after, certainly in response to signs that the economy is softening. And I think the mixed earnings reports that we've been getting for the fourth quarter are very consistent with the kind of economic data that we've been seeing. Pockets of some strength, but an overall slowing of economic growth on its way toward what we think will be a moderate recession sometime during the year, perhaps the middle quarters of the year. And that will be an added test for the stock market. So, yes, I think there is a possibility of some sort of setback in the market in the wake of Powell's comments and also added evidence that the economy is losing momentum.
Is this a good time to be looking to Asian markets? Because certainly January was a stellar month for a number of Asian markets. I believe the MSCI Asia Pacific had its best January in 13 years, and all across the region markets did break records. So is this a buy, or is this are we seeing a peak here? How sustainable are these rallies?
Difficult call, of course, because these economies are tied to some extent to China's economy, which is on the road to recovery. And we do expect to see economic growth gather momentum, accelerate during the balance of the year. But this is all in the context of a slowing global economy, notwithstanding what's happening in China, given what we expect to see in Europe and the United States. These are trade-sensitive economies, Southeast Asia being more commodity-oriented. And we think that this part of the world might be better insulated from a growth slowdown in the global economy, but not totally immune to that. And for that reason, we're still a little guarded toward emerging markets in Asia in particular, and the emerging market sector in general. We think opportunities may arise later in the year, but at this point, we think it might be a little more premature.